You own TCS and Infosys both. They both are part of the same industry, but they both have different, different approach. They both have a different revenue run rate. And for Infosys Technologies, restructuring has still not kicked in. For TCS, restructuring has worked. Why do you own both?
Well, because in a sense they're very complementary. At the moment, TCS is having a far better run than Infosys. Again, we think, and we know both companies well, having been investing in them for a decade or more. We think both are fundamentally very, very strong businesses. One's in slightly better shape today, but from our point of view, will the other one have caught up and made adjustments and be in better shape next year? Quite possibly. So for us, having both, and both are leaders in their industry, is absolutely fine.
You're not worried that Infosys is losing market share, they're losing margins, they no longer enjoy that reputation as well?
We do worry, and we worry about every one of our stocks. And yes, that is the concern about Infosys. Infosys has been the market darling, the market leader, has always seemed to have been, I mustn't say head and shoulders above TCS, but ahead of TCS. And I think its image has been dented a bit, but I think still fundamentally Infosys is still a very, very strong company, facing some big issues as that entire industry is in a worldwide sense, but I think it's adjusting, and I hope making the right adjustments, but we'll only know in a year or two.
But according to you, Infosys at these levels, it certainly does not, it does not warrant a sell.
Oh no, absolutely not. We're very comfortable with both Infosys and TCS, and at the lower end we have Infosys as well in our portfolio. So comfortable with all three.
You have a very large exposure to cement as well. Now that's an interesting position because Indian cement industry currently is plagued with overcapacity. They don't have pricing power, and infrastructure spending is slowing down.
Yes, it sounds a pretty bad story the way you describe it. And I think, yes, short term, there has been a lot of capacity built, and we have seen earnings slow down a bit. We hold Grasim, Ambuja, comfortable with balance sheets, comfortable that they're placing themselves in the right long-term position. We think the long-term demand within India still remains very strong. Are they going to have a quiet year or two? Yes, they are, and they are having now. And I think both the companies I mentioned have been very upfront with investors and the world about what the outlook is like. But are they doing the right things to build a bigger, more profitable business in 5 or 10 years' time, which is how far forward we're looking? Yes. Are they tremendously expensive today? Absolutely not. And they are good value today, but our earnings are going to be under pressure for a year or so, yes, in all likelihood. And we factor that in.
So what is your assumption here? Infrastructure demand will pick up, infrastructure spending will pick up, and cement prices will move up?
Yes, I think above all, demand will pick up. So a lot of profitability at a cement company is how full the capacity is and at what operating levels they're at. So I think that for these companies will be the vital thing. The price, will it go up? It's not something we're particularly factoring in. I think it's more the demand side picking up, and I guess from experience, often if demand does pick up, the price goes up as well. But I think for that would be added icing on the cake, if you like.
My compliments on Bharti. That was a great call. Are you still hot on Bharti?
Oh, Bharti is a difficult business. It is a business we worry about. Highly competitive market domestically. What they're doing overseas in search of growth. It's not one that keeps us up at night, but do we have arguably more worries over that than some other companies we hold in the portfolio? Yes. Do we think Bharti will make it through? Yes, we do. But it's not an easy industry.
So, at these levels, are you looking at exiting your position in Bharti?
No, we're sticking with it. I can't. I'd love to tell you all the things we're thinking of entering and exiting. And to be honest with you, there's nothing in particular at the moment that we're terribly active in. We're quite comfortable with all our holdings. They all have risks, and our job is to know the risks and balance the risks and try and judge whether what we perceive to be a risk is actually going to be a fatal risk. I think we've been around long enough as a team to know that businesses don't grow steadily every year, well, maybe with the exception of HDFC, which has done that. But HDFC is a rare exception. Most businesses go through some good years, then they pause for breath and maybe have a bad year when they're digesting something. Well, particularly true in the cement companies, for example, we've been discussing, or some of the telcos. The industry is not a simple 10% grower year on, year out. And for us in the portfolio to have that balance is what we bring to the party, if you like, from our experience. Yes, each company we analyse quite scientifically, and then the more artistic part of our job is to put the companies all together in a portfolio and combine risks.
The word PSU is completely missing from your portfolio. You don't own PSU banks, you don't own PSU utilities, you don't use PSU undertakings.
Yes, that's a fair point. I think we do worry about how governments act worldwide as shareholders. And we understand that governments often have a duty over and above that to the shareholders of companies that they're invested in. So typically and understandably, governments will act in the benefits of the country as a whole, or less pleasantly to the advantage of the government itself. And one of the concerns when government is invested in companies, and it's particularly true, I would say, in India, can be that businesses get stifled. And if you look at the history, recent history of India, the great success, particularly in the financials, has really been from outside the government sector, with companies just able to move forward by leaps and bounds. We do have some government-related companies, the container corporation, for example.
That's a very small
position. J&K Bank, with big government holdings. And I suspect they could be even better companies if they had more flexibility. The government in India is quite prescriptive with what you can do within a company. And that's really been the success of the Infosyses, TCSs of this world, some of the pharmaceuticals, and some of the newer banks have done well because there is no government.
Do you regret not buying Coal India?
Oh yes. From a price point of view, yes. We looked closely at Coal India and felt it didn't quite meet our quality criteria and didn't buy it, and it's one of many mistakes we've made and will continue to make. But we found over time, just by sticking to our disciplines, of course we're going to miss lots of things on the upside, but overall the things that we miss on the downside will fully compensate for the things that we miss on the upside. A lot of what we do is about avoiding mistakes rather than picking winners. I know that sounds rather undramatic, and it is rather undramatic, and we do hopefully let the winners take care of themselves.